Hello and welcome to our daily Forex market analysis. My name is Schimming, and this review is for Monday, March the 25th. Now I'm pretty excited about this week as we begin, and I think there's going to be some above average opportunities, again specifically in the yen pairs. The euro yen, pound yen, and Swiss yen have the greatest amount of consistent volatility and average daily trading ranges. I do think they continue to present the best opportunities, and probably of the bunch the euro yen would be the preference. Obviously I review it a lot for you and we talk about it in detail, but that's really because it's the best opportunity unfolding in the market week over week. This week appears that it's going to be no different. And the fact that we see as the week started, looking at our currency strength chart, you can see how the yen did begin the week moving down and then traded sideways for a while until the London markets came online. We saw it get a little bit of a lift, and then ultimately when the US markets opened, we saw it get into a very strong mode. The dollar also gained some strength. You can see the dollar in green here gained some strength once the US markets came online. Counter to that was the euro. That all started the week to the upside and did just the opposite. It moved down when the London markets opened and then ultimately continued that downtrend as we saw the US markets come online. So we saw an initial move up in the yen pairs, specifically the euro yen and the Swiss yen. And just to see these things pull back and really start to drop on the day and take out some critical support levels, which we'll look at here in just a second. Now if I remove some of the currencies from this and just to clean up the chart a little bit, I want to show you that a little bit more dramatically. Look at the strength of the yen reversing from a level that was in the 50 range down here, minus 54, to a reading up here that gets into the plus 83, and the euro at the same time had a high of plus 49, and it finds itself down at a minus 111 now. 109 now. Amazing change of direction for these two specific currencies, and I think it does show a great opportunity for us going forward. Let's look at this a little bit differently. The correlation that we saw between the dollar and the yen today, we had dollar strength that moved with the yen, and you can see this is Friday, by the tail end of Friday, showing that the dollar index was moving down. Remember, we've modified our dollar index. We've made it be a more advantageous situation for traders who are actively looking at the markets. Ours is has weightings that reflect current day monetary flows, and it's also a little bit more sensitive to price movements that we experience today. So it becomes a much stronger tool and provides you a unique tool and a benefit to you as a trader. So we look at this dollar index and you can see that it did this little double bottom move at the bottom after the markets opened. Same way we saw how the yen was moving down, so did the dollar index initially. Did this little double bottom move, slightly higher low. This would be a 1, 2, 3 pattern, and then look at the strong move it made following that. And that's not even as strong as what the yen had made, but you can see that we saw strength in both the dollar and the yen on the day. I think it's exciting stuff. Maybe the Cyprus saga is, we're starting to get a little bit more comfortable with it, and we see that there is a solution in range. I think that that solution is a negative for the Eurozone overall. At least the perception in the marketplace has been that today. U.S. equity markets also did not favor what it was happening with the Cyprus dealings today. But regardless, it's volatility we're looking for. I don't care if the markets move up or down. I just don't want them to move sideways, and they can't move sideways forever. They can't go up forever, they can't go down forever, but it's volatility that we feed on as traders, and we're definitely seeing some of that to start the week, and I do believe it will continue. Now let's look at that a little bit more specifically. Let's go over to the euro yen, and let me show you some of the critical ranges that we have been discussing. If you've been following these videos or you're new to them, you can go back and see some of the major points that I've been pointing out to you all along. I did identify and accurately point out the 1, 2, 3 topping pattern for you that was met with some pretty strong divergence after the dollar or the euro yen has made just an unbelievable run, clear from 94 all the way up. This is 107.70, this top move right here. pulled back, moved up again. It failed with a 1, 2, 3 pattern, and it had a lot of divergence that was making this last little bit of a climb. We'd already seen it in transition. We'd already seen some huge drawbacks. I was already suggesting that it was running out of air, running out of steam, and this was kind of the caveat that really saw this thing trade down. Through this, and I've got the trend lines as it consolidated at the top of the range, you can see how the highs were getting progressively lower and the lows were getting progressively lower. Even though it was in transition, the sellers were winning the battle. They were pushing it down a little bit and a little bit more each and every week. We looked at this last little burst, and this was just too much, too sharp of a drop, too fast as we got into the tail end of February, and I think that it just let the pair move down a little bit too rapidly. Spooked probably traders that were looking at it short, gave an excuse for traders who wanted to take this thing long. We saw it consolidate down here below that trend, broke the trend, came up and actually kissed off of it, and then you get a little bit of a pennant formation where we get a very tight trading range considering the volatility it's been seeing, and something has to give. It can't just get to a finite point, and ultimately it went to the upside. So we see it trade along the trend line again, moves up from there, and basically put a test move. This is a higher low and a higher low still that gets it back into that original trend, and then that strong move took place. Now here's the unique thing, here's the interesting thing, because this move, when we get up in this range, and let me circle this real quick, as we get into this situation here, this becomes interesting because it puts us right back in between that 124 and 126 support and resistance range, which was really, I think, critical in the key levels to consider, or two of the key levels to consider as it was transitioning at the top of its trading range. Ultimately, it broke through that 124. And this has been a pretty volatile movement between this just over 124 and just below 122. 122 is another very substantial support range for the pair, support and resistance. And I've marked those three, 126, 124, and 122 are highlighted there in yellow. Now we've seen the pair drop back down. It's come into this 122 to 124 range. It's been bouncing with quite a bit of volatility, and then today we watched it break through that range and trade all the way down almost to 120. Pretty strong move to the downside. So this puts this, if you thought the thing could go, and I definitely was getting of the camp thinking, well, maybe it had moved down enough and we'd see it get back on an uptrend, but it just failed. What's critical here is it didn't get back over that 126. It did not make an assault back on these high levels. It did not make any real inroads to getting back into a consistent track of upward movement on a daily and weekly basis, and now it's failing. It's getting back down these lower runs, and if we can see the pair take out this 119, 118.70, I think is this ultimate low right here, if we can see it get down this 119 range, less than 200 pips from where it is right now, then the opportunity, or right about 200 pips where it is right now, then the opportunity for this thing to trade lower is substantial. And as I've been pointing out all along, again, I don't care if it goes up or down, but I will suggest that the down potential, the downtrend potential, and the identifiable support levels that we could trade from and trade to are outstanding, and I think it presents a much better opportunity for us as traders to see this pair move lower. You should be cheering, wanting, and hoping to see a strong yen over the next couple weeks overall. It's not going to be strong every day. We don't want it to be, but overall it would be outstanding to see a strong yen this week and maybe in the following few weeks, and see what we can make of this particular pair and the other yen pairs as well. In the trade room today, that is what we traded. We were short pound yen, we were short euro yen. There were no losing trades in our room today. There were short trades, the initial short trades on the euro yen and pound yen. Some of us doubted what we were seeing and did not get anywhere near to taking the pips out that we should have. There were some trades in the middle of the run, grabbed some pips there. There were even some trades late in the run, and took advantage of. It's kind of chasing it, but just taking advantage of the fact, watching that dollar index, watching the currency strength chart, just seeing the yen continue to put on numbers to the upside, and the euro continuing to trade down, and the Swiss. You can see euro yen here at the bottom left, pound yen at the bottom right and the Swiss yen at the top right, and you can just see the consistent movement. As a matter of fact, they're consolidating now, and they're consolidating inside the zone, which could in fact create a new opportunity. Now maybe, just maybe, because of the drop today, there might be still a little bit of a retrace potential here, but it's going to have to do something substantial like getting over 122, 123, 124. I think the odds are stacked against us to do this, stacked against the pair to do something like that. So the moves to the upside should be opportunities, or most likely will be opportunities put on new short trades. Again, assuming of course that we see yen strength, and that's going to be the key. Utilizing my currency strength chart is absolutely paramount to being able to identify this in real time as it's happening. Doing cross-currency analysis of one of the largest global Forex liquidity pools and all the transactions that are going on inside that network electronically. We also trade into that massive pool liquidity. So not only are spreads very good, but that's what you get. We don't see slippage because there's so much institutional liquidity into that pool that allows us who are individual traders to get executed instantly and at the price that we're seeing, not the slippage that you're typically utilizing or having to deal with your single broker quotes. So I think that the euro yen is going to be continuing to maintain its average trading range ahead of the pack. There's no reason to believe or even begin to envision that slowing down. Pound yen has lost a little bit of the ground that it was seeing as far as average trading range. That's really more for the fact that the pound has been trading sideways and the euro has been volatile. Euro has been volatile for a reason, but we haven't seen so much life out of the pound. And because the Swiss is pegged to the euro still, we're seeing opportunities in the Swiss yen as well, and something that can take you off the path a little bit, off the beaten path of so many, and have a pair that's still moving with a pretty great degree of range, but it's a little calmer, a little smoother, a little bit easier to deal with for those who are apprehensive to trade the euro yen or pound yen because of their more extreme volatility. So definitely something to consider. If you'd like to discuss this a little bit more, if you have some questions, comments, post them on the videos. I will answer those on future recordings. You can also, we're setting up for our guest weeks. We're going to invite you in and be able to spend time with us and do these reviews and trade with us live real time on a daily basis. Come into the trade room, sit down with other traders who are discussing what they're seeing and looking at the markets together. We're focused on the same pairs, we're focused on the same situations together, discussing it as a group, and each one's making their decisions based on that analysis. So if you're interested in being a part of what we're doing and experience it, I challenge you to find a better, more complete situation than what we are offering. And it's really a process of support and education, teaching you how to, and showing you and teaching you how to be a better trader, and showing you some real simple but proven strategies that work, and then all of us doing those things together. Actually utilizing what we teach you on a daily basis for our own accounts. So it's a unique opportunity of education that's based with support and then with some real activity happening from a variety of people who are all on the same page. We have a tight, very close-knit team, and we have a lot of fun as we trade as well. So if you were curious, want to be a part of that, want to experience our difference firsthand, we definitely want you to do that. Just send an email. It's on this video, info@fxrbc.com, forexrangebarcharts.com. We look forward to having you. My name again is Derek Schimming with forexrangebarcharts.com. You guys, as always, have a great day trading. I look forward to seeing you on our floor.